So I have a short on here. Uh, Getting short here because the really the whole day has been bearish. Right, there's been a strong downward bias ever since 10 o'clock when there was news. There was some bearish news that came out, and we had this big bear bar. And ever since then, there's been this bearish bias. After we had this strong rally, this was a fairly tight channel up. I mean, we had 8 bars up. We had several gaps that I have drawn in here. It was looking really strong, and I was actually expecting the market to have more of a second leg up. And now that's not happening is a bit of a surprise in my opinion. I was expecting there to be more bullishness. I think a lot of bulls were starting to buy in here, and then once you got these 3 bear bars, that's kind of like their red flag. Their alarms are going off, thinking that they're trapped, and then that the market is going to continue this sell off. That's what's happening. So 3 bars down, and then we have a first entry buy here, and different ways to look at it. I would see first entry buy here, then second entry buy. So the bulls are making these attempts to move the market back up, and they're failing. And we also have this wedge here. So market's going down, and then market's trying to go up here. So as the market's going up, we get this wedge pattern, which is a reversal pattern. And so maybe it would be okay to sell below here for a swing, but where I'm selling here is below this bear bar. I'm going for 10 points. So I'm going for 9 points. I was thinking about putting my my profit order somewhere down here. That'd be okay to do. I think I'll just try to get out at this low. So I'm going for 9 points, and I'm risking 6.25. So this is a bit of a swing. It's kind of like one reward to 1.5 reward to 1 risk. So I think the big idea is when the market's going down, and especially when there's room below, like here, there's nothing really on the screen for me, no real support levels to further down. When there's room below, market's going down, you want to be looking for ways to get short. I think it's a mistake to try to be looking for ways to get long, even though we can see there were some strong rallies here, from this low to this high. That's 35 points. And like I was saying in here, I think some people had switched to long through here. Until it's clearly in long, I think you should only be looking for ways to get short. What are some ways to get short? Well, in the trades that I post, a lot of them are basically just bear bars below the moving average like this. So that's kind of how I like to get short. Other ways, you can go down to a lower time frame, like a 2000 tick chart. You go to I'm going to go ahead and move my stop down here to get at least a little bit of profit. You can go down to a tick chart. Let me pull the tick chart up. So this is what it looks like on a tick chart. And the stronger the trend, the better entries you're going to have on a lower time frame, like a tick chart or a 2-minute chart or 30-second chart. And if you're looking for ways on how to get short, if you want to do that, then go to the Magic Moving Average video I made a few months ago. That shows lots of different ways to enter in a trend and how to really utilize your moving average to find trade setups. So I recommend watching that video if you're interested in trading like that. The news we had at the start of today, it was about job openings, and there was another piece of wells that came out. It was bearish news, so the market reacted negatively to it. So at this point on this large bar here, this bar 7, once that's closed, I'm not interested in trying to find buys. I'm not trying to get fancy and try to outsmart the market and think, oh, I'm going to buy down here we could say, oh, it's maybe this is a trading range here. Now we're low in a trading range. We're at the 200 moving average. Um, let's go ahead and my RSI or my stochastics is showing as oversold. So let's go ahead and buy here. And I think that's a mistake. I think when the market is showing bearishness, you really should only be looking for ways to get short. I think you're gonna lose. You're at least gonna lose less money when you're only looking for shorts when the market's going down. There's no guarantee that you're gonna make money, but at least if you're only looking for shorts, I think you're limiting the losses that you could have. So, right, starting out when you're a beginner, there's going to be losses, and I think you're going to have fewer losses if you are only looking to get into the direction of the trend. Another piece of advice is when you have a large spike like this, a really, really high volatility bar with lots of points on it. Like this was almost a 30-point bar. I would go ahead and wait and see what's going on. Don't try to take an order at the close of that bar, because too often you'll just get it mixed up, and then the bar is large, so your risk is going to be large, and it's just too much chance that you're going to mess up a trade like that.
Stop filled.
All right, so came back and got our order there. I think if the market had less two-sided trading today, then I would have just left my stop up here. But since we have had these deep pullbacks, I'd rather not get stuck in that and then get stopped out. So at a minimum, I wanted to at least go ahead and lock in a little bit of profit there. So I think we probably got 2 or 3 ticks of profit off of that. So let's get in kind of later in the day. So let's go ahead and review the chart here. First 2 bars ended up being the high of the day. So, if you watch these reviews, you'll hear me talk about how, like, if you have 2 strong closes in the open, it's reasonable to sell the close of that and then try to bet on lower prices. Bet on that would be the high of the day. And often that'll be wrong. So we can look at 2 examples just here on this chart here. So this day, 2 bear bars ended up, if you would have gotten stopped out, if you put your stop above that. And then on this day, 2 bull bars, you would have gotten stopped out if you put your stop there. Now, that's the thing. You're going to be stopped out, but when you're right, you're going to end up having potentially these huge days. And this is what some people will do. They'll try to find a big swing trade on the open, and they'll lose sometimes. But when they do win, and they do catch the high of the day, then potentially they can make many times their risk. So that's one way of looking at the open, is trying to find the direction early on in the day. Looking at this 6th bar here as a bear bar, I'm not going to mark it, but I do want to say that I think would be reasonable for a swing trade, betting on this being the high of the day. And why is that? Well, so the first 2 bars, they're bearish, so we want to only be thinking about that the market would be going down. We will only want to keep that in our mind. Until the market goes up, we're going to try to remain a bearish attitude. This bull bar, it's a strong bull bar, but it doesn't really go above anything. Then you get a bear bar. The next bar is a bull bar, and then here we have this bear bar. So what we've had is 2 attempts up by the bulls, and these attempts up stayed below this high. So bears that shorted through here, they're still in the trade. Their stop's still up here. Bulls are trying to buy the market up, but they're unable to. They've tried it twice, and usually when they try to do something twice, they end up failing, and the market reverses. So when we're thinking about if we're coming into the day trying to find an early high or low of the day and make a swing trade, I think selling below this bar would be a reasonable place to do that. Right? The market is somewhat bearish. The bulls are failing to go higher, and if we're selling here, I wouldn't go for a scalp. I think at a minimum I would try to go for 2 times my risk there, and at least have that be my minimum profit targets. Maybe take off half your position there and continue to swing the rest down. So I just want to make that clear. You know, if I was selling here, I wouldn't do that for a scalp. I wouldn't just try to get 2 points or 5 points out of it. I'm trying to basically bet that this is the high of the day and the market's going to have several hours down. Now, we have this 10 o'clock news here that was bearish, and of course we can't predict what that news is going to be, so we wouldn't know that there would be such strong bearishness. But after this did form, then we know the market is fairly aggressively selling. And like I was saying, we don't want to get too fancy and too cute and try to buy this or even try to get short. I think what we use this to identify the market is probably going down, it's probably bearish, and then want to just look for shorts. So what are some shorts? What are some ideas to sell? Go ahead and mark this. So 3 strong bear bars down. And this is an attempt by the bulls to move the market back up, and ultimately they're failing. Where are they failing at? Well, they're failing at this previous low here. So I'll draw that in. They're failing at the 200 moving average. And that's a really important piece, is once you get below the 200 moving average, it's sometimes going to be difficult to get back above it. So when you see that we're staying below that, we're also staying below the 20 moving average, then that is increasing the odds the market is in fact in a bear trend. Maybe some people would sell below this first bear bar here. To me, I'd rather wait, and I'd rather see this bar here. And it does have a big tail on the bottom, but I think in this context, that's okay. I think you can go for a scalp here, and on this, I would try to do a scalp of at least 10 points. So, 10 points would put you out down here. I think a swing trade's okay as well, and that's what I had drawn on the chart earlier, was this. The market never came back all the way up, and it wouldn't have stopped you out up here. So maybe some people either got out break even here, or they held through all this and stayed in the trade up here, and they would have been still short either till here, maybe they got out here, or they would have still been short over here. I talk about gaps a lot. And what's the gap that we got? Well, early on we got this fairly large gap from this low, then breakout, and then this high. And ever since then we've stayed bearish. So when I really like to keep track of these gaps and and kind of let the gaps guide my trading. So that gap stayed open. We never came back and touched that low. So that means any bulls that bought below here or bought at the close of yesterday, they're trapped. So they bought here and they bought more lower. They're really struggling to get out of their position. And let me see, because maybe some of them bought somewhere down here and they try to get out here. So let's see. Say they bought below that low, and not really a good bull bar for them to buy above down here. Let's say they bought above this bull bar. Get rid of that. If they bought above this bull bar, it never came back to their midpoint. So maybe they were just buying at intervals lower and either got out somewhere on this pullback or on this. Well, either way, they're struggling to be able to get out, and that's a sign that the market's going lower. On these deep pullbacks like this, if our premise is that the market is going lower, then the pullbacks should be reversed. So we should be fading or doing the opposite of whatever the pullback's doing. So the pullback, the market's going up here. In theory, we want to be trying to reverse that. And you might say, well, Guy, you say, if the market's doing something, you don't want to try to go against it. Well, the bigger picture is the market's going down. So any pullback would be a move against that trend. And then we're still below the moving averages. And so often you will see strong moves like strong closes like this just immediately get reversed. Sometimes you'll see a big close like this. If you sell the close, market won't even get back above the high. So sometimes you could sell that, just risk a couple points and go for 10 or 20. That's just kind of an idea of what happens sometimes. If you are going to do that, you need to trade small and make sure that you wouldn't be risking too much on that trade, because that does get tricky. And often I don't recommend that for beginners, but that's something that people can do. They just need to be able to understand how to manage their risk and understand how to manage the trade. Market was starting to go lower again here, and we're staying below the moving average. This is what I like to see when the market is kind of being cupped by the moving average and being held below it. So different ways to look at this. You could call it a double top here, and double top, good looking bear bar, and then this little inside bar is a doji bar. I think that's okay to sell below that. So we have a short there. I'd probably just go for a scalp on that, considering we have room to the lows. So you go for maybe you risk 8 points or so, and maybe you go for about 8 points or 10 points, and you get out somewhere down here before you get to these lows down here. I think then continuing to try to sell through this, any of these bars really, any of these 3 bars I think are okay to be trying to be selling below. It is coming up against these lows, so your odds are a bit lower because it's already right at these lows and it's kind of fighting against this double bottom. But if it does break out below this, then it's probably going to fall. It's probably going to kind of collapse down for a little bit. So I did like these shorts, and if you're taking this, you should be trying to go for more of a swing trade, I think, because if it's going to, it's not as likely to fall because it has to break through this. But if it does, then it's probably going to have a lot of room to run. So I like these shorts here through here, any of these for a swing trade. Now you see, if you did sell below here, you would have lost on that trade. So, if you put your stop anywhere through here, you would have gotten stopped out. So let's talk about this move up here. Well, it looked so good because it had these gaps. It had a good bull bar here, breakout, and then this low never came back to that high. And we've got a couple more examples of that on the way up. So when I'm seeing that, I'm thinking the bears have been strong, but with this much, like it might be reversing. I felt it was probably too early to be buying at this point, but it could have been the start of a larger move up. So that's just something that I was wanting to be aware of. I think if anyone was short through here for whatever reason, I think they should probably be getting out above this bull bar. And earlier, that's what I did. I did get short through here, and I ended up getting out above this bull bar. Reasons are we have a wedge here, 3 pushes, then a good-looking bull bar, possibly failing to go below these lows. So we have these lows. It's poking through, then it's failing. So far from the moving average. So instead of trying to hold short with a stop above one of these bars, I'd rather just go ahead and get out above that bar. And I think that's a good way to manage that. And in hindsight, that is the correct way to manage it, because it would have cleared out any of these stops above any of those bars. Once the market started going back down here, we got these 3 strong bars. To me, this is a sign that whatever was going on here is no longer happening. The bulls should not have let these 3 bars form, especially as strong as they did, especially with a gap in here that low and then to this high. To me, that means this is over, at least temporarily. It's most likely that we're back on the bear trend now, back below the moving average, and we see these tails are attempts by the bulls to try to go back up again, but they're unable to. And we end up getting a wedge pattern here with these 3 pushes. So I think trying to sell below that is reasonable. And also trying to sell here, which is the trade that we had just took, I think that's reasonable. So it's getting in we're in the last hour of the day. Oftentimes there'll be some sort of collapse in the end of the day. If the market's going down, there might be some sort of collapse down to a previous support level. So let's move over to the left and see what might be to the left. And what I have drawn in is the low of this day here. So that's what we have. And there's also this, and drawn this gap down here. So if the market's going down, to me, the next logical spot would be somewhere down here, which is fairly far. And it's possible the market will just collapse. All the bulls have been buying through here, they're just giving up at the end of the day and they'll just get out. So that's something I try to watch out for. You can see if I'd held short on this trade here that we would have been looking pretty good right now. However, that's just kind of the trade-off between your probability and your risk and reward. If I didn't get out break, with a couple ticks profit here, then I'm sacrificing the profit potential, but I'm also reducing the risk and improving the odds of the trade. So it's always just a trade-off, and it kind of just depends on your personality, how you want to handle it and manage your trade. So I'm talking about a potential collapse happening here, and it might. I'm not necessarily seeing a trade that I'm super excited to be taking yet. Maybe we'll see something, but right now I don't think I'm going to be taking anything. So that's the review for today. Notice something important, right? The market's been down, and what are all of the trades? All the trades are shorts, all right? So occasionally there will be buys. Maybe I think for the best trades, for the best shorts, 80% of those will be below the moving average, and only 20 of the best shorts would be above the moving average. And you can kind of see that today the market's been down the whole day, and the best trades are just selling below the moving average. So I think that's really what you want to be trying to look for, and try to take swing trades when you have lots of room, and or just go for your scalps. So if I was looking at trading here, ideas would be to go down to a lower time frame chart and try to look for pullbacks and take swing trades on that, or try to even sell below this bar with this big tail on the bottom and go for a swing down there. So I wouldn't scalp below that bar if I was going to short. If I was going to sell there, I'd only be trying to do a swing trade, and probably even try to get more than 2 times. I'd probably try to get it down to like 59.35 here. So when you have that potential for the collapse at the end of the day, I'd really rather be swing trading and trying to really capture a lot of that move that could happen. So that's all I have to say for today. Thank you guys for watching. If you have questions, I'll be happy to answer them. Just leave them in the comments. All right. Thanks, guys. See ya.